Welcome back, everybody. 25 invested here. Check it out. I'm in a new spot. The light is so bright in here. I just put the curtains up before I started to record. I just moved. I moved out from that one bedroom. There's no longer a desk fan like right there. My wife's not sitting in the bed somewhere sometimes. I usually sit in front of her. So yeah, we're out. We are out, and I am making videos. So let's go. Seems like I'm busting through all-time highs again. Seems to be like I'm going to be doing that a lot lately, or have been doing that a lot lately, which is very cool. $83,200. So we're officially above the 83,000 mark for a few weeks now, and that is mostly because of Friday, because we actually weren't doing that well for the week up until Friday, and we know why. On the yearly, I'm up 21%. Nice. Is that all-time beat the yearly? About time. So we're officially climbing over the 1 year. We were up huge last year, and I think that everyone was up huge last year. So cool. On the 3 months, we're up 12%. On the 1 month, we're up 5%. On the weekly, we're up 1%. And that's actually a misrepresentation because we ended the week at 83,400. So pretty good. Only $200 missing. Sometimes that says 700. It's really weird. It is really weird. Wealthsimple has I don't know how they track it. I think it depends on how well the US dollar is doing, because I have a lot of US dollar stocks, and that makes up a lot of my portfolio. Apple had a bad week. They just released earnings. Not great. And I was asked from one of the subscribers in one of my older videos, one of my last videos, to go through and take a look at every average that I have in all of the stocks. So we're going to start with Apple. I'm going to go through the alphabet. And I have 15 shares. This is my average, 144 per share. This is when I heard that Berkshire Hathaway was buying more at 144. So I did the same. I ended up buying Berkshire Hathaway BRK.B stock later on in the year. So I'd kind of double down on Apple, but I still believe in Apple, even though they're going through, I'll say, a stagnant time. They have enough free cash flow to revolutionize if they need to. I just hope that, or, I just sit here and I have the dividend appreciation, and then I get my my buybacks. So, yeah, Apple, 144. Going back. AQN, bad. I'm down 49%. My average is 1606. And if we look at, the idea was at 1606 is that I was going to be below that medium line. We could see here the average. They hit a low average here of 1550. It is half that now, and it stings. I won't lie, it stings, but they just had mass amounts of debt. They dilute the hell out of everybody. They were trying to do a big acquisition that I don't think went through. Kentucky Power, just overall not doing too great, which means that I should be looking at it. I always say that, though. I think that I will buy other things before I buy Algonquin Power anyway. So Algonquin Power, 1606. Alibaba, a stock that I bought fairly recently, actually, a couple weeks ago, 2 weeks ago, 3 weeks ago, when it was about $75 per share, $76 per share. I wish it told me or showed me when I bought it last. Does it? No. That's a shame. They used to. My average is $107.25. Nice round number. It is 1.4% of my portfolio. I did have 10 shares. Now I have 12, and I'm down 33%, where I used to be down almost 40%. Not bad. I brought my average down by $3 or $4. BlackRock was something that I bought this year as well. It was a long-term dividend play, but it was also sitting about 625. I think I bought it at 625. So I made it 10% of my portfolio. I love BlackRock. I think that they are like a strong company I wish that they would buy back more, or I guess the dividend growth is still there, but I think that should be stagnating too. I'd love to see more buybacks. They did have a yield when I bought them of almost 4.5 to 5%. Now it's sitting at 3%. So I like my decision. I also like that they are trying to bring in the Bitcoin ETF. I'm not too sure how that's going to work for them, but it's money because they charge money on transactions and management fees, not how well the stock actually does. So, I like BlackRock. You'll see quite a few management companies actually. And here's another one, BN. Brookfield Corp bought this year. The net asset value was $74 per share, $74 per share. I bought it at 47, so I've seen quite a bit of upside. But they also released their financial report saying that if everything goes right, 500 or 100% over the next 5 years per year. So the compound growth is what they're trying to achieve. Long historical averages, they've been doing 11% ROI. So, it's a strong company. It's a great Canadian company. They pay a dividend. It is not very much. So I don't think they're going to be growing it, though. They haven't been growing it that fast or like as rapid as, usually you'd see after a dip like this, you'd see that dividend quite a lot higher. But yeah, BN Corp, another alternative asset manager. Bank of Nova Scotia. I pulled the trigger on this one. I don't think I pulled it too early. It did dip, was my average. $66 per share. It did hit a low of 56. So, and I don't remember buying any more shares of Bank of Nova Scotia. Maybe I should have, but I think I like them where they are. I will start reinvesting the dividends back into Bank of Nova Scotia. At least then I can, confirm I'll get that 6.6% dividend yield and more because of the reinvestment. They do pay about $1 a share, so it is nice every 3 months to get a little over $30. Add that to my dividend update, which should be coming out. I'm actually dropping the ball a couple days late. Maybe it'll be out Monday. Berkshire Hathaway. I am up substantially on this position. Now, I kept telling myself I will buy it at 1.35 book value. So 1.3 times book value. And I think that's still fair. Right now they were trading at 1.53 times book value. I just think that that's too much for the company. I'm looking at it at $300. Right now it's almost $4, so you could say, hey, 25, that's a terrible decision, but I'd rather hold out and buy something that I love rather than FOMO in and then have all sorts of regret on my decisions. Don't regret my decisions. That's the most important rule that I have. So I'm up 41%. And I did actually buy, so I bought one tracker share at 330, and then I bought another, 300, and then I bought 10 shares at 275. So 276.50 is my average. Pretty good. Very good. They don't pay a dividend. Thank you, Warren Buffett. Charlie Munger died recently as well. You say recently, like a month ago. Sad times. Berkshire Hathaway. I do believe his death was priced in. I'm not too sure if Warren Buffett's death is priced in. I wonder how much the successors are actually moving prices around or how much they're actually doing when it comes to the investment. I know everything gets passed through Warren Buffett, but I wonder what they're doing. I wonder if they're making all the key decisions over the past few years and how well they've done. We'll see. Cash. I did empty the cash. This was like 8,000 somewhat hundred. I did empty it out quite a bit to buy MO. So I did sell cash. I did collect dividend first, and I did sell cash at a positive. I did not sell it at a negative. So if for anyone who doesn't know, this is just a high interest savings ETF. Pays like 4 something. What does it actually pay? The dividend yield is 5.8%, so pretty good. And that's just holds its value at about $50, 50.19. So it just keeps going back and forth from 50 to $50.20. So obviously not a lot, but yeah, I just hold it there, collect dividends, relax and wait. Yeah, cat. I'm up 56%. Not a lot to see there. I mean, I bought it at $200 flat. It did hit a low of like 160, 180. I think 180. It hit very low. Hit 93 5 years ago. No, last year. Yeah, 216, and then 200 is when I bought. But in the past 5 years, I believe it hit a low of 165. And I was looking at it at that time. I didn't buy it. I remember watching a YouTube video about their earnings and how they're not going to be able to sustain themselves, and confirmation bias. If you look up, if you search things with the expectation that it's not going to do well, you will find things that confirm your bias. So I do believe recency bias is, it happened. Especially with Caterpillar. This is a stock that I, by all rights, I know Caterpillar makes great things. I use it every day. I used to run machinery. I love driving Cat equipment, and I like the repairs done on them. It's very prompt. I like Caterpillar, and I should have listened to my gut. Everyone was running out of stock. I should have bought it. Who knew? Dollar General, I'm up 7.22%. This is pretty good. I used to be down 30% on this stock. My average is $126. I did make 2 buys at this, I believe. When did I buy this? If I go to my 5-year, I probably bought I'm not going to say 150. I think I bought it like 130. And then I averaged down from there. Yeah, I probably bought it like 130, 140. I think it was 140. And then I averaged down when it was like $100. So, my average is 126. So that is an average that I brought down through dollar cost averaging to a business that I thought was undervalued. And I still do. They had a switch up of CEOs, and then they switched back to the old CEO, which was taking care of its investors a little better. As we can see, we're having a little bit of a jump up here, but we'll see if they can sustain that long term. Dream Industrial. Not a lot to say here. It's been a long time since I looked at it. I've just been reinvesting dividends. They've done well. It's just a company that I haven't heard a lot of news on. It is a REIT, so they pay out quite high, 5.09%. Exactly the same as the cash ETF. But I am looking towards at least a little bit of capital appreciation here. And over the long term, it has seen quite a bit of volatility. I don't remember buying it at $10.50, and I probably should have. I probably should have seen that as a sign, like a wake-up call, but I didn't. And I think I was buying something else at the time. Probably was just sitting on cash, so a missed opportunity, but I don't regret the decision. Empire Co. I'm up 7. I'm down 8%. Is a very small position. This was a position similar to, I guess I bought this about the same time as $M. I figured grocery stores, figured food retail was something that I should get into during COVID. I think I probably missed the boat on that. I'm still not doing too bad. I still got an average, a fairly good average, and I still get the dividends, but I do want to keep this as a very small position, if at all. If I seen this heavily in the positives, I might actually consider selling this one. Same as my other position in SRU, Smart Center REITs. So, yeah. Home Depot, I'm up 16% on. This is actually a company that I'd like to buy another share, probably another 2 shares, if it did hit the same price, which is $306. If I seen it at $300, I would definitely buy 2 more. I mean, I'd take a look at to see why it's there, but I would buy more. Lowe's, actually, which is a competitor to Home Depot, has showed up on the list, the acquires multiple list. Showed up on the acquires multiple list, and I believe that it was on the little book that beats the market list as well. So those are two screeners that I use. Typically, if I see one company that ends up on both those screeners, I do take a look. Like I do, that intrigues me. When two screeners that are mathematically designed to beat the market, when something shows up on both of them, that's worth taking a look into to me. And I read both the books. I understand like what they're doing and what they're trying to achieve. So yeah, I have a little more conviction when I see both, and then I do my own research after. So Intel, I'm up 26%. This isn't the most I've been. I think Intel's had a rough week, hasn't it? Intel has had a rough week. I guess not really. 2.5%. My average is $33.73. Obviously, it was quite lower than that. $24. So I was down like 30% at some point. I did average down in this stock. I did average down in this stock. I do not regret my decision averaging down. They have a lot of big plans for future growth that I'd love to see play out. I don't foresee Intel going anywhere, but I do foresee their market share being plucked away consistently. And I'm watching that happen right now. But, bad businesses don't stay bad forever. That makes sense. Mean reversion. All that jazz. I'm reading books. I'm actually reading. Oh, it hurts my brain. Meta. I'm up 152% on Meta. Damn, I did not think that was going to happen. I did not foresee that playing out. Meta has been absolutely killing it. They just introduced a dividend, which is 50 cents a share or basically nothing. But I own 10 shares. I remember having 8 shares, and I remember at like $75. What was it? What was the low? Yeah. So I remember at like $100. I remember going, okay, Zucchiniberg, let's do this. Come on, pull it through. I'm gonna do 2 more shares because of how negative I was on this stock. I did a gut check. I always do a gut check when I'm super down on a stock, just to I guess confirm if I still enjoy my decision or if I still like where I bought it. It's it's weird. I don't know why I do it. I just figured if everyone's telling you to get out, you should just throw a little bit of cash in. I don't know. I don't know why. I just feel like that's something that I should not listen to my belly and just absolutely do inverse myself. It's strange, but I mean, kind of worked, right? A little bit. Meta, at least this one, it worked. Manulife Financial, I'm up 29.5%. I own 40 shares. This is one that I bought a few times. Anytime it's lower than my average, I threw a little bit of cash in. Obviously, I didn't catch it here, but I did buy. What's my average? 22.75. So my average sits me. Oh, I just had it right there. So below the historical average. It does go up and down. It did have a hard time beating or getting past 27.50, but then it just rocketed up. It was also on my acquires multiple list. So very nice, very cool. Acquires multiple, if you guys don't know, is just a free site. It just does a stock screener. Buddy's got a Toby, I can't remember his last name, some last name. Investment banker, manager, investment manager. He wrote a book about how to beat the market, and if okay stocks at a great price can beat great stocks at an okay price. So they also pay me just shy of 5%. Manulife Financial. I will continue to average in. I used to actually, working at one of my past companies, we used to use Manulife Financial for our benefits, and I didn't mind the benefit plan there. So That kind of, I guess, is one of the things that sparked me to invest in the company, is because I have used them in the past. So Manulife Financial, this is something that I haven't used in the past. Excuse me. It's very dry in here. 9.20% yield. MO stock. This is a company that, again, has shown its face on the acquires multiple and the little book that beats the magic formula investment stock screener. It is a large cap smoke company. They have and produce enough cash to pay a dividend of 10%, which I think is healthy. Watched a lot of videos on it just to make sure that what I see and what a lot of other people see do line up. So MO stock, it's also a stock I've been watching for a very long time, and I bought 2,000, 2,000 Canadian or 1,600 American. It's 2.68% of my portfolio, and obviously not much, but I do like to spread myself thin. If you guys haven't noticed, which is one of the reasons why I don't go through and look at all the averages of every stock that I have, because it's a 50-minute video. Microsoft, I own 2 shares. I'm up 55%. This is my second best performing stock. I bought at 263, and it did hit a low of 236 while I owned it, which was 20%. Maybe I just didn't have cash, or I was just staring at it going, I don't know why I did that. I also bought this pre-AI revolution, so I've been holding it through all that. Microsoft, I mean, obviously a fantastic company, obviously has a very wide moat when it comes to their gaming side, their computer side. I mean, it's a $3 trillion company. Obviously they're doing something right. They're also rewarding shareholders. They do pay a dividend. It is not big, but it's nice. NEWT, I'm down 53%. I think this is my worst performing stock right now, and it is bad. My average is 25.25, and that puts me where are you? 25.25 puts me here about, which means that I probably bought it here. I've had it for like a few years. This is one of the first stocks that I bought. And I've just done terribly on it. I didn't know how to value anything. I didn't realize that they diluted shareholders a lot every year. I mean, less now that they have so many outstanding shares, but they were diluting when I bought this. They were diluting like 6-7%, and then 6%, and then 5%, and then now they're not diluting as much, but still a lot. It's still a lot. They also became a holding company, like a stock holding company. So, and they are an investment management company for small cap companies. So we'll see. They pay a 6.8%, which is a huge slash to the dividend. As a matter of fact, in the same week, NewTek slashed their dividend the same time Algonquin Power did. It's bad. It was a bad one. Nexus REITs, they're having a hard time with their funds from operation. Their payout ratio is quite high. They did hit a low of 660, and I do believe I reinvested the dividends. I have 112 shares now. They haven't cut dividends. They pay a very, very consistent dividend, but they also had a very flat. So when I bought it over here, this chart looked absolutely flat at about 750 for years. And then, they just sort of exploded and had the same volatility, moving very much like Dream Industrial, but Dream Industrial just managed through it a little better. So, damn. If I had to do it all over again, I would have probably done the exact same thing. Royal Bank was just a stock that I was told to pick up because I made a few mistakes in my previous videos, and they called me out on it. I said, fantastic, pick a stock for me. They said, buy Royal Bank. So I have a Royal Bank share. Thank God they didn't say like Berkshire Hathaway A shares. I like 0.000001 share. Smart Center REITs was a recommendation from a friend, a real life friend. I don't have very much conviction on this. I like industrial real estate. I'm not like a huge fan of commercial real estate, but I guess I do own Brookfield, so yeah, I'm a little bit of a fan of commercial real estate. I just don't like it. Is that fair to say? I mean, I'm sure they're doing great. If I'm going to invest in Smart Center REITs and the property that they own and manage, why not just like own the companies that operate on those properties instead? So that's kind of a weird way to look at it. But if the money's going to go anywhere, I'd rather it go to those companies instead of the management company of the land. Maybe that's not the right way to think about it. I don't know. Let me know. Comment. That's what comment sections are for. Just call me stupid and to tell me my hair looks fantastic. VIG. I'm up 9.66%. Not a lot to say there. Vanguard Dividend Appreciation ETF. It owns Home Depot, owns Microsoft, it owns Apple, it owns companies that appreciate and pay a dividend. I'd just hold it there. It's not hurting nobody. It is holding all the stocks that I would have bought anyways. Johnson & Johnson's in there too. Yeah, I'm going to keep it. Walmart. 28% up on Walmart. Actually, that's pretty good. I don't think that's the highest. Oh, yeah, it is the highest I've had. Oh, almost the highest. Really getting there. Oh, it is the highest. Yeah, it is actually the highest I've ever seen it. So that's pretty good. Pretty good. Walmart is, again, something that I bought a very long time ago. $132.50 a share. Not bad. Not bad at all. It's up $5 today. Damn. Almost 1%. That's a lot. And then Xeqt, which is just a huge chunk of my portfolio, as it should be. If you guys follow me on Blossom, then you'll know somebody by the name of KYT. That guy's fantastic. One, he's a very, very kind and funny individual. He has lots of fun content that he posts on Blossom. He also has his own YouTube channel where he exclusively buys Xeqt, and I think he does options on it, but he also used to do sports betting, which is, I think, where he got a lot of his money. So, I mean, obviously a smart guy. I wouldn't say luck has to do with his successes. It's just a cool dude. So, I mean, if you're not going to follow me on Blossom, you should go on Blossom and follow him because that guy's fantastic. KYT Magic. 609 shares. $17,300. It's 20% of my portfolio. Between this and Berkshire Hathaway is about 30% of my portfolio. I should have been up in that. Instead, I bought MO stock. I shouldn't have done that. I should not have done that. I should have done that. I would have done it again if I had the choice, if I had the chance. I did end up buying more Xeqt though because I bought MO. So, just to offset how much money I was putting in MO, I'm like, all right, I'll put half my cash. I'll take out half the cash. I'll put half of it in Xeqt, half of it in MO stock, and then just sit on that. Yeah, they pay a 2% dividend too, which is pretty nice. The capital appreciation also is very nice. It is a globally diverse ETF. It's just one of those do no wrongs, and this was recommended to me from a real life friend as well. Yeah, and he puts all of his money into it. He's 100% Xeqt. This is off the back of I'm not going to say a recommendation from the what do you call it, the podcast Rational Reminder. This is not like a Rational Reminder recommendation, but every time they talk about a globally diverse cheap index fund that owns 33% stake in your home country and 33% American, and then they're explaining this stock. And also VEQT is another good
ETF to go, very much the same, just different allocations, just slightly different. It isn't, I mean, the amount of money they've gained, or the amount of appreciation that has been had between VEQT and XEQT, is very similar. So yeah, anyways, that's it. That's every stock that I own. We're going to go through my penny stock portfolio soon, and I did sell, I did buy in the penny stock portfolio, which is pretty nice. That portfolio has been moving around. It is the more fun portfolio. So even though these stocks move around quite a bit more, I'd say the more fun for me is the penny stock portfolio, because I got like a little spreadsheet. I do a little thing before starting my recording. It's just a lot of fun. It's high risk, low reward, and yeah, I get to see. Sometimes I woke up the one morning, ORM just exploded 100%. That's fantastic. I don't get to see that very often in this. I mean, I did come in and see Meta up 20%, so that's cool, but I don't really get to see 80% swings. That's a little much to handle, I'm not gonna lie. Anyways, see you guys next time, and bye now.